Hello, Oracles. Well, Tesla stock is down a little over 3% today on the news that Goldman Sachs is downgrading their estimates for what they think they're going to be seeing for Q3 deliveries. We'll get into those numbers in a minute and what their report says, but with the stock price coming down, that also brought down the stock price of Tesla. When we got our payouts coming out today, that just means that the dividends that we got paid today were going to buy us even more Tesla for it. So hey, as far as I'm concerned, if we have analysts coming out giving some numbers like this, it's really no big deal. If the market's going to sell off on that news, I'm going to consider it a buying opportunity. And with dividends coming out today, great buying opportunity with that extra cash coming in. We also got some information from Gene Munster about the strike that is going on with the UAW and how that could be affecting Tesla going forward. So we're going to get into all of that information in just a minute. All right, so looking at the charts today, again, down 3.32%. I'm not concerned about it. We are still in this upward channel here. I'm actually going to draw that out now for you. So here we are with this nice upward channel that we are on. Again, we have this gap down here to 256 to get filled, and then we've got the gap up here to 289.52. So we've got the FOMC meeting going on this week. That's really the biggest macro news we're going to be seeing. So unless Tesla comes out with something specifically themselves, we're going to be trading pretty much with the macro environment. Now, RSI is at 55, so right in the middle. Again, we can easily come back up here. So I have a feeling tomorrow being the first day of the FOMC might see either a flat day or slightly green. And then I think we're going to end up seeing some uncertainty on Wednesday. I'm looking to keep us in this upward channel, which I do think is going to happen this week. And so now looking at Tesla itself, again, we did come up and we broke out of this downward channel. It's not as clean of an upward channel that we're on here, so I didn't really draw anything for this. A little bit of a gap down here to 14.18. Maybe that gets filled tomorrow if we dip down early in the day, and then we'll just kind of track it from there. So again, on a day like today where we got the dividends paying out, having it come down just means that for those of you who are dripping in, you are going to be able to buy more shares with that dividend payout. I am one of those people. I ended up getting $162.62 from my payout this month. That went right back in and bought me just under 12 shares of the stock. So now we're going to roll that right into next month and continue growing it from there. And so now onto the reason why the stock was down a bit today, underperforming the market. Walter Bloomberg posts out Tesla. Goldman Sachs reiterates neutral rating, price target $275. Quote, we lower our 2023 and 2024 EPS estimates for Tesla, mostly on lower ASPs, average selling prices, and in turn auto gross margin ex credit assumptions, driven by lower prices for S and X and to a lesser extent Model Y, and partly offset by higher Model 3 average selling price assumptions. Tesla materially reduced S and X pricing on 9/1 by 15 to 19%, and reduced Model Y pricing in China in mid-August, and has been discounting inventory on hand in other markets like the US this quarter. However, Tesla raised pricing on the Model 3 with the refreshed version Highland that is now being sold in Europe and China. So while yes, these are all facts that Goldman Sachs came out and reiterated, will this play out? I don't know. We do know that the reason why Tesla had come down on their prices was because the interest rates were going up, thereby squashing demand for the entire automotive market. Seems like at this point, and we'll find out for sure on Wednesday, that the Fed is going to be pausing rates. Now, we have a feeling they're going to pause now. Are they going to raise again in November? Again, we still don't know. We have to get through this Wednesday's meeting first. But if the Fed is not going to be raising rates anymore, Tesla is just going to fluctuate prices here and there as they see fit. But if they're going up on prices for the Model 3, and we know that they have reduced costs, that could be better for margins. We don't know that, and we won't find that out for sure until we get to Q3 earnings. Now, the big price cuts coming down for the Model S and the X were significant, but that is a smaller portion of what they sell for their vehicles. Now, are we going to see an increase in sales in that here in the US now that they do qualify for the EV tax credit? Again, we have yet to see that. The next piece is they also came down on pricing for FSD. Has the take rate on FSD gone up, thereby bringing in actually more dollars than they would have if they kept it at $15,000? We don't know the answers to that question either. that there's a big piece of it, because if more people are taking that on, despite the fact that we have prices of the Model S and X coming down, that is pure margin. So that would completely offset those sales, or could potentially offset those sales. So let's play this out in Q3 and see what actually happens. So Goldman Sachs' assessment, I'm not going to say is wrong, but I think they're missing some pieces of the puzzle as well. They did mention the Model 3 with the price going up. They also didn't mention how the Model 3 is also going to be increasing production in Shanghai going into October and going forward. So that's going to be more Model 3s getting sold at a higher price with a lower cost. That's going to be a big margin buffer right there as well. So we don't know if that's going to be happening in Fremont. I have a feeling it is, but we have all of these pieces working that were not mentioned by Goldman Sachs that I think are going to play into the Q3 earnings. And now looking actual long term, which I am a long term investor for Tesla, my vision on this is regardless of what actually plays out, it's still going to be near term movements. We still have a lot of uncertainty in the economy. We've got high interest rates that are supposed to be coming down next year. When those interest rates come down, that in turn is going to mean that the automotive market is going to be growing. It shrank this past year and the demand was tight because of the interest rates going up. Well, the opposite will happen when the interest rates come down. May take a little while and a lag for that to happen. Don't know what else is going to be happening in the economy at that time, but theoretically, that will end up happening. And once we do find a solid ground, demand will pick back up and Tesla will have better play with their pricing. Tesla does still have some of the best pricing power when it comes to the automotive market. Now, the other piece that people don't talk about all the time is the fact that legacy auto, GM, Ford, all these other companies are doing pricing changes like this all the time. We just don't see it. It's just because that pricing is going to dealerships that will then take the car prices and put that to the consumer. That's happening behind the scenes. With Tesla, it's all out there in the open. So it's not like this is not happening with legacy auto. It is. We just don't see it. And us as the consumer have to deal with the dealerships, and there's the middleman there. So we don't see the true pricing that is going on. Tesla doesn't have dealerships. Tesla sells direct to consumer. That's why we see these price changes going on. It's nice because we can actually understand the business a lot better. And now to break down all of the current price targets, Gergavin comes out posting $400 for Morgan Stanley, $350 for Wedbush, $305 for RBC, $300 for Deutsche Bank, $278 for Citi, $275 for Goldman Sachs, $272 for Tesla's current stock price, actually $265 now, which is right at Wells Fargo price target of $265, Barclays at $260, JP Morgan at $120, and our favorite Gordon Johnson GLJ Research at $24. And now another thing that's going to be impacting Tesla and the entire automotive market is the UAW strike that's going on right now. We have already seen Ford laying off people. We are actually now hearing about one of the suppliers for GM laying off people. And Gene Munster here is breaking down how it can affect Tesla themselves. As the UAW strike wraps up its fourth day, it's more clear that Tesla is the winner. I want to warn you, there are a lot of numbers to follow. Ford said if the UAW gets what they want, their UAW-related labor costs will double to what I estimate to be about $136 per hour in all. Last week, I estimated it would end up closer to $80 per hour. Now I believe it will land at $105 per hour, a 64% increase from pre-strike levels. The reason why the percentage increases more than the projected 30% hourly wage increase is the total package includes pension plans, inflation protection, and profit sharing. My updated math suggests Tesla's labor costs will be 48% lower than the big three after they come to terms with the UAW, and after Tesla's employees get a 15% bump, likely in the next 6 months. Last week, I estimated Tesla would emerge with a cost structure 30% below the big three. Now I believe it will be 48%. Importantly, this exercise excludes Tesla's cost of stock options that manufacturing employees receive because it's difficult to predict where the Tesla stock price will be in a year. If the stock goes down, there will be a reduced impact. If it skyrockets, stock-based comp will skyrocket. And so we have already pointed out numerous times over the last few quarters how Tesla makes more money per vehicle than any of the legacy automotive makers out there. So this strike is going to exaggerate that even more. We've got GM, Ford, Stellantis are not able to produce as many vehicles due to this shutdown, which means that economies of scale get minimized a bit here. Now, it's not like it's all of their factories, but as they're doing this, there's talk of how many more factories are going to strike. Well, we just have to wait and see on this. But because of the fact that it's a lose lose situation for Legacy Auto, because either they have to concede and pay even more money to all of their workers, which nothing against the workers, but it's going to put a big dent in the bottom line of all of Legacy Auto, which we've already shown that they're not as profitable as Tesla. Tesla, even if they do pay their workers 15% more, still going to be making even more money on the bottom line when it comes to each vehicle sold. Tesla is also working significantly on reducing the cost of making these vehicles. We've seen that with the Model 3 Highland. We are going to see that again with the next generation manufacturing process. We're talking about Gigacasting 2.0, which is going to reduce the cost of vehicles even more. Tesla's cutting costs in a lot of different places, so even if they have to pay their workers a little bit more, which is well deserved, they can still offset that by dropping the price of all of the costs in other areas of the production. So this is going to be significant playing out forward, especially considering that Legacy Auto is trying to transition over to EVs, which we know they are not profitable in at all. So their ICE vehicles are the only way that they're getting profit right now when it comes to production. They're going to be selling these vehicles and trying to transition over to EVs where they're not profitable. And they're going to be having to pay even more because of the UAW. It's going to be an even more painful transition than we had talked about in the past. So is Legacy Auto going to survive this or not? I don't know. Now, keep in mind, Ford and Tesla are the only two US automakers who have not declared bankruptcy in their history. Everyone else has. Jim Farley is talking about how this could be detrimental to their company. Is this going to be a situation where they do have to file for bankruptcy? I don't think they will, but again, I don't think that the government's going to be able to bail them out this time. Although I'm sure they're going to try. Don't know how this is going to play out because we know that the UAW donates a lot of money to Joe Biden's campaign and the entire Democratic Party. So is this a game that's being played politically? And as per usual, the workers are the ones who are suffering? Not sure. We have to see how all of this is going to play out. But right now, it seems like the UAW is really putting the crunch down on Legacy Auto, and it's allowing Tesla to grow even more. You guys can leave your thoughts in the comments below on what you feel is playing out. And again, if any of you are working for any of the legacy automotive makers and you're involved in any of the strike whatsoever, I would love your feedback as well. So that's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support. Have a great one.